Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 24th of February, 2026, getting on to 6:40 p.m. Central Time. Well, the event of the evening is obviously going to be the entertainment that President Trump provides us with. And of course, we're going to hear all the great things that he did. And by the way, there are a number of great things that he did, so I'm not being facetious. I have never seen an incoming president do as much as he's done. I expected it. I told you I thought he would win, and I said the difference is he's going to come in running at 100 miles an hour, which he did, because the odds were it would be stymied come the midterms, which I think it will. That doesn't leave him without his executive orders, which it does. And if the Republicans win again, well, they'll stay with those for a while. If the Democrats come in, everything starts to get unwound. That seems to be how it works, and I think you get that. The other thing that we have to be looking at is the situation between the U.S. and Iran. The buildup for the U.S. attack on Iran is larger than it was the first time around. We haven't seen this size buildup in decades in the Middle East. It's just monstrous in its scope. And, if the Iranians continue with the idea that, hey, you got to trust us. We're entitled to enrich uranium. We're going to dilute it. You can send in everybody you want to see that. But we're good guys. We have the right. We've spent a lot of money on it. We're keeping it. So that means they want to continue to enrich. They don't want to discuss the missiles, and they want to give money to surrogates. Why would you not attack them? There becomes a logic to this, all right? And I know what we'll all say. Maybe we get hurt. Maybe they can defeat us. Okay. Do you believe that? Okay. It could happen. Anything can happen. You put soldiers in harm's way, things happen. You go to war, things go wrong. Okay. That's how wars are. It's the reality. The situation last time was stellar. This time, it's a whole different game because they know what's coming at them. We'll see what happens. I didn't like the fact that China wants to sell these subsonic missiles to Iran to take out U.S. ships. I was not happy to hear that this late in the game. They should have been much more quiet on that, in my opinion. But that's for President Trump to deal with President Xi at the beginning of next month. Isn't that what they're meeting? It's sometime in March. All right. Let's go and take a look at data before I go anywhere else at this point. You're going to get the Mortgage Bankers Association. You're going to get these Fed speakers, and you're going to get the reaction to the president's speech. That is what is so important. So stay tuned, watch it. I'll be watching it word for word and trying to see what he says. Are there any shocks in it, or is he going to be tamer? I don't know, but he has an awful lot that he has done. There's things that have happened against him. We see it. We know he gets stonewalled at everything he tries to do in Congress, but he's got a lot done. All right, one other thing before I go to the charts with you. New people that want to subscribe. Now, let me define new people. They've never paid for a subscription with me. Got it? If you're a new subscriber, going to become one, if you go to iraepstein.com, you type in, by the way, in your Google, whatever you're using, iraepstein.com/new sub. It'll take you to a web page we put up purposely for this. This is nowhere on the website. You can also click up here, and you can click over here if you're watching me on YouTube. 60% off any of the research packages we have, whether it's spiders, whether it's a combo of Spider and futures, whether it's the futures and my written twice daily updates. You get the benefit of every trade that I recommend, follow up all the way through, stop orders, profit objectives. You'll see winners, you'll see losers. Hopefully you see a great year. Last year was one of the best I know in the recommendations that I try to put out. I was probably the most proud of last year of every year that I've ever done. We'll see how this year goes. It's starting off wobbly, but the whole market's wobbly. As we thought the markets would be strong in certain areas this year, what's strong has been a surprise in the metal markets. I think you'd agree they don't stop so far, and there's reasons for that. So let's go, if we could now, to the charts and take it the rest of the way. Typically, you get a big move on a Monday, up or down. Doesn't matter which way. the markets attempt a Tuesday reversal. A smaller move on a Monday, that does not fall in. You had a big move yesterday. You had certain stocks that got beat up terribly. If you're watching PayPal, they've gotten beaten up. Stripe is trying to come in and now buy parts of the company. This is one after the other. When we take a look at the gold market, you were just up to 51. You actually were down to 51.35.90 shortly after opening at 51.60. Went up and made a high, and now you're back down. You're all over the board because the market's trying to figure out, what is the president going to say? Is there a surprise? Did Iran deliver something to him that he's going to announce tonight? Nobody knows anything. I'm not counting on that. As long as you keep a bid in this market, I'm very bullish in terms of this can go higher, and that means war, okay? That's what I'm looking at. Bonds and notes are not giving you any message at all. When we take a look at the S&P, the market's trying to now stay away from the 68.76 level. It got under that, but it's back to 69.05 above the 18-week average of closes. When we look at where you're at, does that look to you like a trend? Because it doesn't to me. And what we had was lower highs, but we have higher lows coming into the market. I don't see a darn thing that's here to be done one way or the other. When I look at the moving averages, I've mentioned to you each day that on rallies, I'm seeing resistance at the 100-day average up to the 18-day average. I cannot tell you what's going to happen after the State of the Union or by Thursday when the U.S. and Iran meet, but so far that has been the case. And the breaks haven't even tried. The Bollinger Band, I think I said earlier in the week, they're not in play. So far they're not. That's been the reality of the situation, and momentum is up. So you have the bias down as the market's under the 18-day average. You have no trend. You have lower highs but higher lows going into the market. Momentum pointing up. When you come over to the NASDAQ, it's the same story. You got the lower highs and higher lows. Not a trend. Bias down. Big support at the 200-day average in the Bollinger Band. And momentum up. I mean, it's not a trend trade. You have a trend trade going in the Dow, which was the strongest for a while, and it's become the weakest in the market. You had your bounce today. It didn't make back all of what it lost yesterday, so no surprise there. But you are sitting in the Russell at a market that is just sitting at the 18-day average going, what should I do in the market? Which way should I go from here? And that's pretty much what I think it's doing. In the DAX, I'm looking for support to come in here. I see a lot of money still headed to Europe and other parts of the world coming out of the U.S., and I think that's going to continue. I look for this to be supported. When we look at the bonds and the notes, I think we have to say one thing that's a surprise. Interest rates have been down, and they're still down. And they're closer to now, just close to 4% in the 10-year note, not the 4.11, 4.2. They're close to 4%. That's interesting as can be. The 2-year note has recently been losing to the 10, but it is back into a full support zone in the market, and that's where I think it's going to try to make it stand. That doesn't mean it's bullish or bearish. In the dollar, the trend is up. The bias is up. You're overbought as can be. Anytime you have slow stochastic readings, any number over 70, and both numbers aren't over 80 going sideways, it's overbought. That's what you've got. So I look for the resistance, if it pops, to be the Bollinger Band, the 100-day average. But I'm not giving you 2 cents for anything going into this speech. And what happens if we go to war? I think the market gets very emotional for 3 minutes, and then reality sets back in. In the euro, the trend is down. Lower highs, lower lows. I look for large support at the 117.45 level, the combination of the Bollinger Band and the 100-day average. That's a short covering zone, not a buying zone. In the Japanese yen, I have turned bearish again. So I expect the pros to be selling short in the 64.70 level, stops over the 65.05 and a half zone, and looking to see can they get the market down into the 63.60. I believe that we're now seeing the footprint of Prime Minister Takashi coming in and getting control of the central bank. When we take a look at MBTG, the Bitcoin, okay? And I'm still watching the Feb here. I mean, you're now getting into areas that are got under 63,000 intraday today, got to 62,580. So still no sign of where it's going to bottom out. It's in a downtrend, but with that oversold condition, I think it's more liquidation than it is new selling. In the energy markets, I couldn't be clearer. I mean, I wouldn't know what to do. If the Strait of Hormuz gets shut, why can't you go up another $5, $10 in the Brent? You could. I don't know how long it would be shut for. If the market finds peace, why is the market up here in the Brent or the WTI? Tell me, other than the war premium, you still got plenty of oil. I can make the argument for a down. Not a massive down, but a decline in it. But I don't know what's going to happen there. I don't have that pay grade. Higher lows, higher highs in heating oil, and we're coming to the end of the heating season. As I mentioned last night, March is right around the corner. Think spring. Think weather that's no longer sub-zero. Think weather that starts getting into the 40s, the 50s in the Midwest, and as we already saw a week ago, 60s. And in the nat gas, it's not able to lift itself. It's still bearish as can be, in my opinion. Could be going back into the 250s before all is said and done. We are one of the world's largest suppliers of nat gas, and that isn't going to change. So you put it together. Remember, you can move your cursor up here. You can, again, and I invite you to do it, go to iraepstein.com/new sub. Get yourself a subscription. I'm Ira. You have yourself a great evening. I'll catch up with you in the other videos or see you first thing in the morning Flash video. Take care.